Hi to IPO subscribers. I'm Kotte Murali Krishna, a chartered accountant and SEBI approved research analyst. So I want to ask one question to the investors. Why your people don't follow the fundamental analysis? The investors who have not followed the fundamental analysis have subscribed a net worth eroded in investment trust by 20.37 times. What will be the future of investors who got allotment in trust? Can they get back at least 1 rupee of the face value of equity? No. So follow the fundamental, follow the fact. What is the fact? Investing in healthy companies only. But today, we will review IPO from Skynet Infinity Limited. As I told you, fundamentals of the company is very important. We are starting with the financial analysis of the company. This is the financial analysis of the company generated by AI-powered software. And based on the information given to the software, this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company healthy company. So first is solvency, health analysis, solvency. Solvency ensures the sustainability of the company. So here all the metrics are positive. So sustainability is strong. Coming to liquidity, liquidity ensures the survival of the company. So liquidity is also strong. So next, coming to operational efficiency, some are negative and some are positive. Here, this operational efficiency, this metrics will be changing from time to time. So we need not worry about that, because when a healthy company, the corporate governance also very good corporate governance, and you don't have to consider this negative metrics of operational efficiency. Coming to financial irregularities, no financial irregularities have been reported. And the profitability, EBITDA is 7.14, EBIT is 6.545 crores, PBT is 5.86, PAT is 4.2, and cash profit is 4.8, EPS 6.12, okay, moderate. EBITDA margin is 13.69%, net profit margin is 8.14, and ROC is 25.45, very good, more than 20%. Coming to book value 27.666 paisa. Very good. And coming to cash flows, cash flow from operating activities is minus 1.66 crores, and net cash flow is positive, plus 1.46. So this is a market value. Based on the market is cap price of 77, we are getting price earning ratio of 12.58. So price to book value is 2.78. Very good. Both are within the benchmark levels. So we can go ahead simply without any doubt. So coming to growth indicators, except one or two, all are positive. So this is the AA financial analysis. Here is the IPO presentation. So first, business overview, valuation, market sentiment in an investor view. Today we are analyzing the IPO of SKYTECH Infinite Platform Limited, a Bangalore-based industrial automation company. The key question for investors is SKYTECH Infinite Platform attractively valued, or is the valuation dependent too heavily on future growth? Let us take a closer look. Business overview. SKYTECH Infinite Platform was incorporated in 2009 and provides turnkey industrial automation solutions. As the company is having a good standing period. What does the company do? Designs and manufactures industrial automation control panels, provides engineering, installation and commissioning, offers maintenance and life cycle support, integrates PLCs, drives, switchgear and sensors, provides solutions across multiple industrial applications. Key products: PCC panels, MCC panels, VFD panels, PLC panels, APFC panels, and control desk panels. Industry exposure: the company serves a diversified set of the industries including power, water and energy, infrastructure, automotive, chemical and pharmaceuticals, food and beverage, HVAC and process industries. The company's partnership with established technology players such as Mitsubishi Electric and Enrest and Hauser provide additional technology technological credibility. The business is therefore positioned to benefit from India's increasing adoption of industrial automation, modernization, and smart manufacturing. What? Market opportunity. The long-term industry opportunity looks positive. The major growth drivers are industrial modernization, smart manufacturing, legacy system replacement, diversified demand, after sales opportunities. Yes, so from an industry perspective, market outlook is positive. However, SKYTECH is still a relatively small company, so execution capability and working capital management remain important. Yes, of course. IPO details. The IPO is a fresh issue of 22.68 crores. Price band is 73 to 77 rupees. Major user funds, approximately 16.81 crores is proposed for working capital requirement. Very good. And this can give additional business to the company. And this is important because it tells investors that working capital is a significant requirement for the company's growth, of course. Now comes the most important part, valuation. See, at the upper price of the band of 77, EPS 6.12, PE 12.58, PB 2.78. Very good. On the face of it, then these numbers look reasonable rather than expensive. And this is the way SKYTECH become interesting. Both. Valuation, the positive side. The company's current P 12.8 does not appear aggressive for industrial automation business if earnings growth can continue. Yes, of course, the PB of 2.78 is also very good, is also within the reasonable range. Based on the growth assumptions provided in the IPO analysis, the projected PE could fall to approximately 6.74. If the stated earning growth materializes, similarly, the projected PB is estimated at around 2.12. So purely from valuation perspective, valuation looks attractive, but there is an important caution. Investors should not value the company solely on the projected 6.74 PE. The valuation depends on achieving a very strong future earnings growth. Of course, we can expect also. Therefore, the current 12.58 PE should be treated as the more reliable strength point. Very good. What could make this IPO attractive? There are several positives. Reasonable valuation, but 12.58 P is not an aggressive entry valuation, of course. Industrial automation opportunity and diversified customer industries and technology partnerships and promoter holdings. Promoters are expected to retain approximately 70% of ownership after the IPO, indicating continued promoter involvement. But there are important risks. Now let us look at the other side. Cash flow. One of the biggest concern is the company's history of negative cash flows. Of course, this can be taken care of once the company have additional working capital. And for an industrial project-based business, profits are usually useful only when they are eventually translated to cash, of course. Therefore, profit growth must be supported by operating cash flows. This can be expected. So, working capital dependence, 16.81 of the IPO proceeds is proposal for working capital. This indicates that growth may require significant funding. Investors should monitor receivables and an inventory, working capital cycle, operating cash flows, of course. Related party concerns, the presence of related party business operating in the same sector require additional monitoring. Of course, that competition will be there, that impact also will be there, but this company can take care of their business is enough. Small scale, the company remains relatively small with around 87 employees. This creates higher sensitivity to. It's not an issue. You see, employees are depending on the size of the business. It's not an issue. Market sentiment. And now let us discuss market sentiment. The allocation structure is QIP 1.03% and NI is 49.89, retail is 49.08. NI is this thing is more high compared to any other support. The extremely low QIP allocation means institutional participation is limited in the same issue structure. A large portion is therefore directed towards NIA and retail investors. This suggests that IPO demand and post-listing trading could be more sensitive to retail and high net worth investor sentiment. Therefore, market sentiment cautiously positive The business and valuation story look positive, but the low institutional allocation and SME nature of the issue means investors should expect higher volatility and liquidity risk. Importantly, current available secondary IPO sources do not show a meaningful live subscription figure. So investors should avoid claiming strong subscription-based sentiment unless verified from the exchange on the relevant bidding dates. Eagle IV investor scoreboard, business model positive, industry potential positive, valuation attractive, growth potential positive, but execution dependent, and the cash flow key concern, working capital needs monitoring, governance moderate concern, governance moderate concern, market sentiment cautiously positive, final investor view. So is SKYTECH Infinite Platform IPO attractive? Our VV is valuation attractive. At approximately 12.58 PE and 2.7 IPO does not appear aggressively priced. The industrial automation sector provides a favorable long-term opportunity, and the company's diversified industry exposure and technology partnership are positive. However, investors should not ignore the company's negative cash flows. This is not in a worry because the company is going to have additional working capital, and this negative cash flows can be taken care of. And working capital requirement, of course, the company is planning for additional 16.21 crores. Don't worry about that. Related party concerns, it's common in all the cases. Small operating scale, of course, SME means small operating scale only. So therefore, the IPO appears more suitable for investors who are comfortable with SME risk and execution uncertainty. Coming to final Eagle IPO, attractive valuation, cash flow need monitoring, market sentiment cautiously positive, and key investor question, can SKYTECH convert its expected earnings growth into sustainable positive cash flows? Of course. If the answer is yes, the current valuation could provide reasonable upside potential. In case, if cash flows remains weak despite strong reported profits, the valuation attractiveness could diminish. So we don't have to worry about that because the company is going to have an additional working capital funding. All the deficiencies, whatever are there financially, that can be taken care of. It's not an issue. Company is also a good standing period company, and one can, of course, take this as a positive decision depending on your view. Final verdict: SKYTECH Infinite Platform IPO attractive on valuation, but cash flow is the key invested with concern. Don't worry about that. This is the Eagle Eye AI, and thank you for watching. As always, investment decision should be based on your own financial goals and risk tolerance. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you. Thank you very much for watching video.